Okay, recording this video Monday 3rd of February 2014. It's just gone 12:45 p.m. Chicago time. Huge down day. Hope you make good money today. We're down 2% plus on the indices, 30-40 points on the Emini, 1.8 million contracts traded, and we've crashed through daily support. Just before getting to the charts, though, just to let you know, we're now in Hawaii, on the island of Kauai. Left Banff, Canada, Thursday last week, came through San Francisco, which was nice, and now the trading day for me in Hawaii starts at 4:30 a.m., which sounds kind of tough, but I actually quite like it. Feel very productive here. Kind of usually done by early morning on the trading side, and then can just do some admin things during the rest of the day. So it's one of the trade-offs. You know, it is paradise here, but it does mean an early start. Anyway, so let's get to the charts. We got to 39 a minute ago, just on the Emini. We're well past the window for a reversal today. I would say if the market's not reversed by about 11 in the morning, then we're just going to continue in that trend direction. So it's likely that we're going to close on the lows today. Yeah, we're coming back through 40s again. So the market's traveled a long way. Probably going to spend the rest of the afternoon just kind of gradually kind of breaking to new lows, just a little bit, each kind of break, and then closing at the almost the absolute low within a point or so of the low for the day. That's the usual activity for a range daylight today. But everybody seems to be talking about the yen today when I look at my feeds. I don't know why. It's a bit late in the game to talk about the yen. I've been talking about the yen for a long time. And it's one of the macro reasons why this move has traveled a lot further than we kind of have been used to over the last 6 months. Every correction we've seen over the last 6 months has lasted 2 or 3 days and then bounced back really strongly. But we got two kind of macro trends that mean that this trend move is to the downside. It's going to travel a little bit further than we're used to. One of which is, you know, the carry trade kind of unwinding. So last year, you know, equities making new highs, yen making new lows. Then we found a bottom in the yen, and the yen's been rallying back, a little bit of a short covering rally kind of so far. So we'd kind of topped out in equities, and the oscillator has started to roll over, break through the zero line. Now we're getting to the other side of that. This short covering rally is getting a little bit explosive. On the upside, on the yen, we're starting to reach oversold levels on the equities. So, you know, at some point we'll have a little bit of a bounce back when the yen kind of reaches that exhaustion point and comes back down. The other kind of macro one is bonds. Again, exactly the same picture. Equities last year making new highs, bonds making new lows, but then particularly the 30-year bond, we found support, and we've been rallying in bonds, and so, you know, people are scared out of the equities side of things, and the bond market's kind of doing quite nicely, and we're also getting to the other side of this kind of oversold level as well. Not going to call it too early, because I think we're going to travel a little bit further, because we've got this, you know, this trend move is going to go a little bit further to the downside than people expect, because everybody's used to 2-3 day corrections, and this one's going to scare them a little bit more. In terms of better X trend on the weekly chart here, this is the kind of level where we're kind of playing around. So we've just overshot, you know, the support, which is a trailing stop based on exhaustion volume. This was the Christmas rally kind of down here, the beginning of that Ben Bernanke type speech and the move to the upside. We're playing around those lows, so at some point we'll find support and kind of bounce back a little bit, but not quite yet. Now, so this is where I think we're kind of going on the downside. This is the usual picture, looking at 3 time frames side by side and a factor of 3 roughly between them. So we start with a 135-minute chart. 3 times that, there are 3 135-minute bars in a daily chart, and then, you know, daily to weekly is roughly 4 to 5 between the two. You just use the weekly chart because of convenience. Ideally you'd have a 3-day chart, but TradeStation I can't do that. And the reason why this move is going longer is we still have to make pullback to end of trend on the 135-minute chart. So the break into a trend move was through this support level up here in the 1830s and 40s. It was a long way away. So this thing has to make pullback to end of trend on the 135-minute chart. When that happens, that's likely to sync up with a cyclical support on the weekly chart. So the lowest time frame, a trend move here, syncing up with a cycle move on the weekly chart. It'll be a pullback in an uptrend, cycle support kind of coming in here, but we've still got to see the better sine wave kind of wrap around kind of down here and rally back. So, you know, if you look at the timing of that, we just started this week. We've got a couple of weeks of weakness, I believe, until we see that cyclical support kind of come in, and then we can start to rally from there. So the first thing I'm looking on the downside before this thing's all over is a pullback to end of trend on 135-minute chart. And we crashed through daily support here because we're not put in exhaustion selling on the downside. It was a big reading in terms of the selling that got this thing going, but we're looking for readings that'll kind of mirror the exhaustion buying and selling readings that we had kind of previously. So got kind of close, but we didn't get that kind of a reading. So let's see what that ends up being over the next few days and so on. So big down day today. And then in terms of trades and kind of how to get short on days like this, must admit at the beginning of the day I was unsure as to when to get in on this short trade. So overnight, this is the Sunday night into the open on Monday morning, we had this rally, blue professional bars. You could see the market was weak because we couldn't get through resistance. If the market was strong, we'd have overshot the resistance levels by a little bit, but we didn't. In fact, what we were doing, we were overshooting support here. So that means the market is weak because we're just cresting through the support level here. And then when we come up to the resistance lines, we're just touching those and immediately kind of going away from them. So a good entry short would have been here, but I was too late for that. So that was a flush pattern. We were coming back into that blue professional zone where the professionals had sold it down. If we'd seen a blue professional bar at the highs there and broke the lows of that, or one or two up there, I would have been more confident to kind of get into it, but didn't want to do that. So then we kind of crashed quickly to new lows here during the beginning of the day, and that shows the exhaustion selling, the strength of the selling into that move. It's at cyclical support and we bounce from there. That's where I got short my first trade at short at 71.50. Amateur bars. So amateur up bars into that little retracement. The amateurs are leading it there. That's weak. And then bang, we kind of crashed through new lows. So there's a whole series of areas to kind of get in short. The next one's cyclical resistance, which is a pullback and a downtrend. Get short there. Another opportunity. We bounced off end of trend here. And here's a nice little pattern into blue professional bars, Rambo patterns. So first of all, the professionals were getting short here, then the amateurs thinking that they were going to break up the end of the downtrends in. No, they get wrong-footed. Rambo is a potential reversal of an amateur breakout, so the amateurs are buying the breakout there. They get wrong-footed and we kind of head to the downside. So one of my nice short trades was short 54.75. Now the reason for getting short on this one, so we continue to break to new lows. This is a nice little pattern. We know we've got a little bit of an edge here, a little bit of a left shoulder we're bouncing off because we've got exhaustion selling on the downside. But look at this bullish divergence pattern. It is right on the zero line. When I see that, I say that is too close to the zero line. We need more selling to kind of put a bottom into the market. So look for a flush pattern after a first bullish divergence pattern here when it's close to the zero line. So I'm looking for that flush pattern to kind of get us to new lows, kind of get some more selling in. So I know that pullback level is weak at that point because we're going to see some selling that's almost as extreme as the exhaustion selling here. So got short into that at 54.75, kind of just up here. And then it kind of crashed to new lows where we put in our flush pattern here. So out with 4 on that one. That was a nice little trade. Of course, it ran as soon as we did that. It ran even further to pull back to end of trend kind of down here. But that was the reason for getting into that short trade, and that was a nice one. I might kind of tag that one. I haven't been looking at this chart since starting this recording, so we're breaking to new lows. It's just all kind of downside damage. And you can see with the whole move on the way down, the resistance lines just don't get broken. We pull back in a downtrend. This one, you get a Rambo pattern, kind of keep on going to the downside. Another resistance line. They're all kind of good place to kind of get short. And we're just continuing down, broken into 37s. Wow. So I'll tag on that little kind of day trade, but there are plenty of opportunities to get short. And the reason for not thinking about getting long is that none of those resistance lines got broken to the upside, to show that there was kind of inherent strength in the market. Now on the 4500 tip bar chart, it's just been pulled back to end of trend, continuing down here, just crashing and crashing. 11 o'clock comes along and a little bit of divergence, but we don't get any decent kind of rally to the upside, so we're just continuing, going to close on the lows. Big day. Anyway, I hope you traded it well, and looking forward to getting back into trading this week. 54.75, short 54.75. Just checking stops and targets. And the reason for getting short again is we've got to run out, pull back to end of trend on the 1500 tip bar chart. So we did finally put in the exhaustion pattern. So this is exhaustion getting the move going. This is exhaustion ending the move. Or a whole bunch of blue professional bars kind of come in. But the bullish divergence signal is right on the zero line. So we'll probably come down, make a flush pattern, something like that. We've got these lows to test. It's 52 even, 51.75. So targets at 50.75. Who knows if we'll just kind of bounce off a previous low, we'll kind of go through. But let's just leave it there and just see what happens. We're just running out the clock here. Pull back to cyclical support. Be probably dirty end of trend. Not sure what we've done in terms of this level. Yeah, dirty end of trend is what it'll be. So let's just see here, it's kind of crashing. So just looking for another little push down and a flush pattern here. So it should be again quite exciting in terms of volume. Okay, we're just stuck. Had a little push back. And everybody's wondering, is that it? Is that over? Surely no. We have to wrap around. We have to go back, put in that flush, put in this dirty end of trend support. We've got cyclical resistance in due on 500 and on 45. This was, extreme selling, getting it going and then ending it. And we need to see a little bullish divergence, play with those lows. So come on, crash through 53s, and all of a sudden people who are in too early will think, whoops. So we got these blue professional bars just sitting as they sold those little pushbacks. Come on. Alright, we just had another little spike up on 500. Just like this one. And I know we're in dues, yeah, so cyclical support, so that's a dirty end of trend, just went off on 1500. But we're now breaking the lows of this, so it's looking for, if it had gone a half point or more, that wouldn't have been good news, but now we're breaking through the lows of it. So looking for that flush pattern on 1500, another kind of surge is selling. So it's just been gone quiet for a bit. Now let's come down, test those lows at 175. Having a down bar. Right, we're just playing with these levels. It's a Rambo pattern, a little overshoot of that dirty end of trend. And 175 is the low. It's just here. Rambo. Okay, that's significant on 1500. So if we start breaking through the highs of that, it's time to just dump it. But we're so close to that 175. Let's see if they rush it. Just looking for 50.75. Okay, we touched it. So let's see what we get. Crash through. 50.75 taken out 4. Excellent. And now all the blue professional bars. When this went, it just went so fast. So blue professional bars kind of coming in. 8,000 here. That looks like a flush-ish type of pattern kind of going on. I know we've overshot here on the 1500, but could be starting to build a base around the 50s. We'll see. It's been a heck of a day. Just sold off and off and off. 30 points. So I don't know. That's over trading for me. I'm gonna leave it there. But 10:50 a.m. Super.